Hello and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. Before we get started, standard disclaimer, none of this is investing advice. Do your own due diligence. And today's guest is a highly respected analyst who started his career on Wall Street in the 80s, where he held positions as chief market strategist and portfolio manager for several hedge funds. He's spoken around the world at a variety of investment conferences, and his work has been featured, and he has been featured as an interview subject on Kitco News, Stansberry Research, and many, many others. Mr. Peter Grandich, it's an honor to have you on the program.
Very much an opportunity to speak with you, Jesse. I really, I said to you before we started, a long time ago, as you said, I started in the dinosaur age of the 80s. There were a few gentlemen who helped me in my early career, and I said, if I ever make it in my career, I make sure I do that towards the end of mine. So here I am.
Well, it's much appreciated. So let's get started with your own journey in investing back in the dinosaur ages, as you said. How did you get started, and how would you describe your overall investing philosophy?
Well, first of all, I never even graduated high school. I was a warehouse manager. I took a small sum of money, turned it into a fairly large sum, and then got contacted by a penny stock broker back then, which was a kind of a popular thing at the time, penny stock houses. And whatever I made, I lost it all within 6 months. And so I started an investors club. A gentleman showed up that owned a small brokerage firm, heard me speak, suggested I was in the wrong business. And despite everything my wife had to say about it, I decided to leave a good paying job and become a stockbroker. But unfortunately, I couldn't do back then what was the only way to really start a business as a stockbroker, and that was cold call. So I literally started a newsletter so I could write my ideas down and hope people would find me versus me having to find them. One thing led to another, and I was head of investment strategy. Hard to imagine when I think about it now, because what little I knew back then versus now. And I made a forecast in August of 87 of a crash, and the firm wanted me to retract it. I didn't. There was a crash. And then on the very next day, I said the market would be back to new highs within 2 years. And if people didn't think I was crazy to forecast the crash, they certainly thought I was crazy the day after to talk about a market recovering all the losses that many people thought was going to lead to a depression and all. And that really set the journey on for me to, manage hedge funds and stuff. And then I decided in 1995 that I would become the legend in my own mind and turn the 10 commandments into the 10 suggestions. I left the money management business under the pretense that I reached the American dream and got involved very heavily in the metals and mining industry, both as a promoter and a newsletter writer. And that really stayed through 2013 when I decided that the metals and mining industry, Mark Twain was right in large part because a gold mine was a hole in the ground with a liar standing over it. So I moved on and focused on what you can see in my background, what's left of it, but at the time, a very lucrative sports management business where I dealt with professional athletes and all. But in 2020, I left that because of everything that was happening in the social and political environment. And now in my twilight of my career here, as you and I speak, I literally write the blog basically for fun and for clients and friends who have followed me. It's my intention now in my 38th year that if the good Lord allows it, that I can make it to my 40th year, which will also be my 68th birthday. And then we'll decide then whether or not to hang up the cleats, so to speak.
Well, you touched on metals and mining, and I definitely want to get into commodities with you today. But before we get started with that, how would you describe the overall state of the markets and the economy at this point in time, and what are some of the challenges that you see up ahead?
Well, it's nothing like when I started. When I started, 90% of the trading was by individual investors. It was done mainly on two exchanges. Now, when you watch some of the financial programs that still shoot their programs from that exchange, that might as well be a museum because most of the trading is not happening there. It also has gotten to the point now where individuals have very little influence or what to say about what happens in markets. In fact, biggest concern and one of the things that led me last year to make a move that really I never thought I would, and that was I ended up selling all general equities not related to commodities and all bonds because we see now almost 60% of the money is in passive funds that's not actively managed. And while it was a good thing going up, it's going to be a negative going down because there won't be any manager to say, wait a minute, I don't think you should sell that stock or that sector. They just have to follow the flows of the money. And then the rest of the money, other than a little bit from retail, is in computer-driven trading, where some of these programs and the ways they do it don't even know the name or don't even care the name of the stock or what they do. It's all related to either words in headline news or in some sophisticated program mathematical equations. So the market that I entered and the market that exists now is 180 degrees different. There really is no commonality. And so one of the things I always tell people is you can't use just what you were using back then to decide what to do, because the whole board game has changed.
Now, there's been a lot of talk in the commodities space about a commodities super cycle upcoming, about, or that perhaps we've already entered, a switch from overvalued tech stocks, momentum stocks, and a shift going into more real assets. Do you see that as well, or is it more nuanced than that?
I think the difference now than any other commodity bull market that my career had seen is we realized, and we only concluded this, and Jesse, I can only speak from an American standpoint. I can't speak for anybody else. But as an American, Americans didn't realize how much stuff that they were dependent on came from overseas, and how risky it was that those people who were providing it may or may not continue to provide it. They didn't realize that until the pandemic hit, and suddenly realized our drugs and almost everything we need of critical mass is coming from overseas. That was the first change. The second change now, of course, is because of what's happened in Ukraine and Russia. We've now concluded not only are our energy needs here dependent on others, but we have all sorts of huge issues of shortages of a variety of things. And part of that is, and politicians don't want to talk about, because I hope Americans forget it, is because when everybody did lockdowns, no one stopped and said, wait a minute, if we lock down everything, that means we stop people from making things and growing things and all that. And you just can't turn it back on the day we decide it's okay and to go back in the world and all. So there's a dramatic shift, but one of the things that I would say that's different now, and why I literally, as we speak today here in early June, I literally went 100% and almost 100%, almost no cash in my portfolio, but spread among different than I only did that once before in 2018. I did it for just gold. Now it's gold, silver, copper, and uranium. I think those markets in particular have tremendous upside potential. They're the only things that I can find that I don't have this concern about of entering too late. I use now a holy grail, I call it a sentiment indicator, where definitely people are. And in those, especially gold and silver, most people are despondent and depressed, while the stocks and bonds at the end of 2021 were basically in the euphoria stage. And that's the place where you need to be selling, not buying.
Well, let's touch on uranium. Where do you see the uranium space right now? Because we're seeing a lot of sentiment shift in the political class from it being, basically put in there with oil and other things that are reviled, and now it's being accepted as green energy in a lot of these places. You've got reactors being built all over the world. You've got the current spot price being below cost of production for the vast majority of companies out there. You mentioned that you're holding uranium, you're buying into uranium now. What opportunity do you see there, and where do you see the sector headed?
So in my 25 years where the metals and mining industry was my main livelihood, I never really got involved in uranium. And many people didn't. There was an occasional time when people spoke about it. There were a few known newsletter writers that kind of specialized in it. But a few years ago, I was listening online literally, and I heard this gentleman speak, and I said, what? Uranium's at $20? Cameco is at $8? Why? I mean, don't people realize we're going to need nuclear? And that drove me into the first wave. I literally just aggressively bought them and said that I believed uranium would end up the best bull market I would ever end up in. But because they went up so fast, and everything that we purchased either made 100% or 300% or 400%, the old PD said, I've lost enough money to learn that, there's bulls, bears, and pigs. Let me take this profit because this ran too fast. Now I've stepped back in, and I shared in my blog and my views that now I believe there'll be a more calmer but sustained move. And literally said, as we speak today, I noted to folks that the only two ways I see uranium not moving much higher: A, the world has to truly implode. For whatever reason, it's a worldwide depression, and everything just goes to hell. I mean, literally to hell. And the other is there would have to be a serious nuclear accident again. Without that, there's only one path, I think, for uranium prices, substantially higher. So therefore, I came back in a big way. Cameco is an absolute must own. I've never seen where something that could be so needed be handled by so few companies that people can depend on. And then there's a couple others. Kraken Energy is one that I bought into. I would caution one thing, two things I'd say. For those who seem to spend a lot of time on Twitter, I got off Twitter, although I still use it to watch what a few people are saying. People become much too short-term oriented. They're expecting too much too fast, and the moment it doesn't happen, they kind of become self-fulfilling prophecies and all get upset and express it, and then people think something's bad is happening. And two, not all uranium companies, even though many of them are likely to rise in this move, are going to be successful because it's so difficult now. As much as the political environment, like you noted, has changed, and it's favorable now, politicians are not against nuclear new plants and things of that nature. It's still going to be a very long time to go from start to building to developing and delivering, and it may miss this cycle. I think the cycle is going to last for years, Jesse. I don't think this is something that's a 6 to 12-month environment, but I don't think you can just throw a dart and assume everything is going to make money in that area. But I do think if you buy uranium, which you're able to now through some of these things, and actually participate in the physical price movement, I find it very hard for it to lose at this point in time.
I can definitely echo your sentiments about uranium Twitter. I'm very active there, and there's a lot of emotion going on. There's a lot of memes. Everybody's watching the price day to day and seemingly complaining or being in jubilation about it. So I kind of take all that with a grain of salt, and I have some fun with it, but I definitely see what you mean there. Let's move on to oil now, something that is hated, something that is being rallied against by the political class right now. The bulls are saying that oil peak demand won't come until at least 2030. Some are saying 2050, and they're saying that it has a long way to go, so there's a big opportunity there. And on the other side, people are saying there could be a big recession, the implementation of green technologies, of green energy. Where do you see oil positioned right now?
Well, from an investment standpoint, in the chart that I use, it's now up in the, if not the thrill stage, the euphoria stage. And that's really not a time to be buying. You could still hold it because I still think there's a lot to go further with this energy crisis. But I think it's going to be very, very hard to find individual plays that you could say is undervalued. Probably what you're going to find are the things that, the laggers, because they don't have the best tools to want to own, but now people are just searching out for anything. But I do think the energy crisis is dramatic. It's paramount. It's going to last a lot longer. If we think about it, here in the United States, 64% of all Americans live paycheck to paycheck. 46% of them only have less than $1,000 saved for an emergency. So just think what's happening to those people just on the energy side. Gas is more than doubled to fill up their cars to get to work and so forth and so on. The cost, whether it's electrical or natural gas to heat their homes, et cetera, and now add the food problems. For a few months, they can get away with charging their credit cards, but eventually they're going to get up to their limits. And so the oil situation more is a crisis to impact all other things than an opportunity to start looking first to play something in that area. So I don't know when it will crest or what it will crest at, but I do know it's not something that's going away anytime soon, and it's going to have tremendous social, political, and economic impact for as far out as the eye can see.
You also mentioned natural gas there, and I'd like to touch on that. Obviously there's a ton of drama going on in Europe with Putin demanding payment in rubles for natural gas, threatening to cut off or even actually cutting off gas supplies to certain nations for their denial to pay in rubles. Before the whole invasion began, there was a huge spike in the natural gas price, specifically in Europe. Do you see any opportunity in the natural gas sector, and where do you see that headed?
Again, it's the same thing. I think it's a paramount problem. It's going to exist. I when I started in the business, they said, don't talk about religion, politics, and other men's wives. Now, I've embraced my religion in my work, and I clearly am not afraid to talk about politics. One thing you can say about Trump, whether you loved him or hate him or somewhere's in the middle, he went before that NATO at a meeting. It's online. People can watch it and said, are you guys crazy? You want us to keep throwing money into NATO to support you, Germany and all, against Russia, but you've now built your whole energy needs on the supply from Russia. It doesn't make any sense. And now we've seen that because the ones that are dependent of the most are the ones that are trying to be as quiet as possible and not look like an adversary to Russia. So that still has a lot of time and issues to play out. But from an investment standpoint, again, because it's moved so much, it doesn't fit my criteria trying to buy them when no one wants them. The old contrarian approach that doesn't seem to exist anymore, but I think it's still going to play an absolute role in what happens social, politically, and economically here and abroad.
So let's touch on the monetary metals, gold and silver. Obviously, I know you have conviction in those. I was going to ask, in your mind, are they still a safe haven asset in a perilous economic environment? But I think I know the answer. But where do you see the metals right now? You said the sentiment was very low in the sector, and that's something you like to see. And as a follow-up question, do you prefer gold or silver? Is there room for both, and why?
So I have found gold and silver to be, up until now, just a capital appreciation play. The times I've gone in it, it was simply because I wanted to turn $1 into 2, 3, or 4. The difference now is, and why at the end of last year, and especially now as we speak, I literally have gone almost 100% invested. I have almost no cash left in my portfolio, spread out among gold, silver, uranium, and copper plays. But gold and silver are, especially gold, are useful as an alternative to paper currency. The one thing I know that I would have said to you a year ago different, Jeff, just than I'd say now, is I would have told you back then, I probably got 5 or 15 years sometime left in my life at my age. I'm 66 now. And I would tell you, I may or may not see the end of the US dollar as the reserve currency. I will tell you what has changed in the year. What has happened over this Russian war and how America has acted, how its allies look at it, not just for what we did by weaponizing sanctions, but also how we exited out of Afghanistan and didn't really care at all about our allies, I think has accelerated the eventual move away from the US dollar as a reserve currency. And with that, one of the reasons why I've said to people, why do you stay so bearish about gold? And I understand that on Wall Street, because listen, gold is kryptonite to the financial service industry. When you sell paper assets for a living, you don't want to paint a great story about gold because it's probably going to conflict with the story you're giving people about stocks and bonds. So I never expect the general financial service industry or the tout TV, which, CNBC, I call it tout TV. I don't expect them to be ever speaking about that. But why has for several years now, continuously, central banks, who really, if there's anybody that would be anti-gold, be them, have been aggressive buyers and continue to be, especially places like Russia and China, because they know the handwriting was on the wall. I just think that handwriting now has been accelerated. And why I say that all is, besides owning gold and silver related stocks and other ways, I also think one should own it as an alternative to paper currency. So there's a two-pronged reason now to own them versus when last I plowed into them in 2018, it was strictly as a capital appreciation. Do I own one over the other? Retail investors always like quantity over quality. They rather buy 10,000 shares of a dollar stock than 1,000 shares of a $10 stock. It could be the same company. It's the same with gold and silver. The retail investor tends more to silver because it's more priced to what they're used to. I always believe still, and this kind of irks silver investors when I say this, but I always believe the big boys or the big crowd is going to buy gold first. Doesn't mean you don't own silver, but they're going to buy gold first. And if and when gold goes, silver will go, and then we'll have certain times, because it will come more speculative, where it may lead gold for a while. But I think you have to own both of them.
So you touched on copper as well. I've definitely got to ask about that. What is it you see in copper right now that presents an opportunity?
Well, it's not just me. If one would just do a search on copper, we're watching some brilliant minds coming out and speaking about a tremendous deficit. You can't have all this talk of electrical this and electrical that and computers and cars and all without dramatic increase in the ability to deliver that electricity. And really, the only prime way electricity gets delivered is through copper. Yes, aluminum can be used, but it's not highly favorable. Well, the issues that we have, not just in copper, but in mining in general, we just saw CapEx spending hit a 15-year low. There's been no new copper mine approved in the last 2 years anywhere in the world. It's just an amazing phenomenon. And as you and I speak, there's all sorts of news coming out of South American countries that where copper is running of having huge issues now with people and ability to deliver. So not only do I like copper very much, and not only do I concur with a lot of these experts saying how much more is going to be needed, but I think you can't do what we used to do 30 years ago. Just you could have taken 30 years ago, we could spin a globe, let our fingers hit and go, yeah, we can go there. Now you can't do that. I mean, you know, we're watching all of this. So I have focused what time that I'm putting into these things in North America, Canada, and the US. I feel much more comfortable. My biggest holding is by far is a company called Arizona Metals, and obviously where they are, they're in Arizona. I'm not worried about those news events that can hurt me in other places, terrorism, nationalism, things of that nature. And because we here in the US have neglected on all mining fronts, we're going to see politicians far more favorable, especially in states where the left isn't in control, and save the turtle, save the bird, isn't leading the way, and environmentalists preventing anything from being mined. So I love copper very much. I think it's destined to go a lot higher, and I think where you look for it and mine for it is going to become paramount. And so I would tell people first start looking in North America before you go anywhere else.
So how do you approach investing in commodities? This is a broad question, and I'm sure there's a lot of different ways, but do you do your due diligence and dive into individual stocks? Do you prefer ETFs? Do you prefer holding gold and silver bullion, or is it a combination? What's your approach?
So there was an old comedian, even before my time, Milton Berle, and he was considered one of the greatest comedians ever. But what he was famous for was stealing other guys' jokes, changing them somewhat, and then using him in his act. I recognized long ago that I was never going to be the smartest or second or third smartest guy that ever worked on Wall Street. So the next best thing was to try to identify those who are, and make sure you listen twice as much as you speak. So I've always been that way, even though over 38 years, I was able to garnish enough that I could, in a sense, go on my own. In most recent times, I've been blessed to discover someone who I never thought could be found in the metals and mining. And quite honestly, I left the metals and mining industry because there was very few like this gentleman. His name is Michael Gentile. So I feel it's important that when you're looking in any industry, but in this particular industry, because in mining, it's very vanilla. See, you're in computer software technology, you can invent something. By the time you get it to market, somebody's invented a better widget. Mining is pretty well vanilla. So management and their ability to raise money and promote and all that stuff is key, and having the people with the pockets that can do it. And so I still like individual stocks. I'm not a big fan of exchange traded funds because I still think selectively one can outperform, even though 80% of money managers underperform the S&P 500. If you think about that you would have been better off 8 times out of 10 to put your money in an index fund than give it to some particular money manager. But I'm old fashioned. I still, I've done fairly well myself. And I just think surrounding myself or following a certain amount of people plus myself, I can still do well on the individual stock performance than just giving it over to a fund or an ETF.
If you were to give some words of wisdom to an investor who's new to the space, to the commodity space specifically, that might help them along their way, what do you think is the most important things they should keep in mind?
Well, let's see, Jesse. I lost millions not once but twice. I I have enough negative performing stocks that I bought over a lifetime that I can write a book about them, as well as the book that I've written about the success that I have. I think a couple of things stand out. Here's the mistakes that I think both the investing public and many of the professional advisors make. Some people can afford the financial risk. In other words, if they lose money, it won't dramatically change their life. But the mental anguish that they get from losing that money just destroys them and anybody and anything around them. And so I think the ability to measure what your mental anguish could be in case you're wrong. Now, that's a thing you don't normally hear from financial advisors. There was an old show called Happy Days, and it was a guy Fonzie, and the big joke was he couldn't say I was wrong. I've learned to say publicly I was wrong, and I'm going to be wrong again. So if you're going to be wrong, you have to remember this rule as well. It's not how much you make, but it's how much you don't lose, which is going to separate the winners from losers. And the ultimate crime in investing is not being wrong. Like I just said, we're all going to be. It's staying wrong. And what makes you stay wrong is hubris and false pride, and all the things that also in general life can cause you issues. So I just think, especially now that people are much more short-term oriented. When I was first in the business, research reports had a 3 to 5 year outlook. If you tell somebody, I think over the next 3 to 5 years, I think this could do this, that, or other, they look at you. 3 to 5 years. Are you crazy? And of course, experience is still one of the greatest assets. One of the things that happened in this cryptocurrency craze, something that I called the tulip mania of the 21st century, was when people like me, who when it got to 65,000 Bitcoin, I finally made a comment and said I would sell it all. This and many of them can't be sustainable this way. The criticism and the comments that came out, mostly from people who had limited experience. In fact, the internet was pushing these internet sensation gurus who were born out of the pandemic, who might have been 21, 22, 23 years old. And really, the only real challenge they ever had in their life before them was an algebra class a few years ago in high school. And yet people were now depending their finances on them. So I think experience and proven experience is still something very, very worthy to seek out and get. And I don't think no matter how long you've been in this, you have all of it that you'll never need to keep your ears and eyes open. And I still do, even at this stage of my life.
Well, thank you, Peter. This has been an incredible conversation. For those who want to hear more from you, where can they find you online?
Well, I'm down to just a blog. I don't Twitter. I don't Facebook. I have a blog. I do sometimes make videos as a YouTube channel. I only share about what I'm doing for myself. I try to make sure people understand it's not an advisory service, but petergrandich.com. All my writings, various booklets are all there. It's all free. You don't even have to sign up. You can literally read that stuff without even providing an email. And it's my way, as I told you, to pay thanks to many people who have been clients of mine or followers of mine, even when I wrote a newsletter in these latter years of my career. So I thank the good Lord for being here. I wish you nothing but the success. I think the area you're focusing on, one of the reasons I was willing to do your show, is an area that's never gotten as much coverage as it should. But I now think people realize how critical commodities are going to be in our everyday life for a very long time. So I commend you on that, and I hope you have great success in it.
If you enjoyed my discussion with Peter Grandich on commodities, you won't want to miss my interview with Lobo Tigre, where we discuss why Lobo thinks gold and silver are not commodities or precious metals, the bull case for base metals such as copper and nickel, and reasons why Lobo has been taking profits and proceeding with caution in the uranium sector.